golf. When he tried to teach himself kung fu. And when he tried to teach himself to cook. Careful, babe. So when Adam wanted to learn a tap dance, he decided to mirror an expert. That's why when it comes to learning to invest in the stock market, Adam uses the new Mirror Learn and Trade platform on Bursa Marketplace. He just needs to register, choose from a selection of analysts to mirror, learn how they manage and strategize their portfolio, and mirror. With 100,000 virtual ringgit. Sign up on bursamarketplace.com. And just like Adam, you can start your investment journey today.
Hello everybody, welcome to this webinar brought to you by Kananga Investment Bank and managed by Wealthford in collaboration with Bursa Malaysia. So if you have watched the video, this is from the Mirror Learn and Trade from Bursa Malaysia, which is a feature that they allow you on the Bursa Marketplace. So when you go to Bursa Marketplace, you can pick the Mirror Learn Trade, and then you can mirror and learn from all these approved analysts featured on the Bursa Marketplace Mirror Learn and Trade platform. You can follow all the analyst trade ideas there. Okay, and Kananga also has an analyst that feature his trade ideas there on Mirror Learn Trade on Bursa Marketplace. All right, so welcome everybody to this how to profit from chart patterns in Malaysia stocks. Okay, so this is Shane Chu, the moderator for this webinar brought to you by Kananga Investment Bank. Now today, as the title suggests, we are going to delve deeper into chart patterns. So for those of you who have been asking, for asking us to do sessions in technical analysis, so this is it, we hear you. So we bring to you this webinar on technical analysis. Today, we are going to learn from a renowned speaker from Singapore on how he does technical analysis through the chart patterns. All right, so without further ado, just let me go to the disclaimer for this session. So whatever case study that we present or whatever charts that the speaker dissect in this session, it does not represent any buy or sell signal to any company. So if the event that you want to trade, you want to buy or you want to sell any stocks from this webinar, you do it at your own risk. Okay, so this is the most important slide. Now for this quarter four, okay, quarter four hasn't been easy for Malaysia as we have no rising cases of COVID-19, but nonetheless, even though you are bound at home during this CMCO, if you're in Sabah, Putrajaya, KL or Selangor, don't worry, we still have some webinars for you planned in this Q4. The next session coming up is in the Mandarin session by one of the research analysts from Kananga Investment Bank, Mr. Tay Kin Yong, that will be conducted in the Mandarin session. Jingji Mantua, if I pronounce it correctly, which is a rocky route to a recovery. So in that session, Mr. Tay will talk about the market outlook for this Q4. And then subsequently in November, we have this session with David Pol, which talk about portfolio timing. Then in the end of the year, in December, we will have this session on market outlook for next year, 2021. So this is what Kananga has for you for this quarter four webinars. So let me introduce you the speaker today. So it gives me great honor to work with Derrick again on this webinar. This year we have worked with him 2 times, so this is the 3rd time due to popular request. So we are bringing Derrick back for another session of Today is not on cycle, today is on technical analysis. So Derrick is the founder of Timing and You program, dedicated to raise awareness of the looming sovereign debt crisis, guiding individuals to survive and profit from the devastating financial crisis through the period of 2015 to 2022. So he has been an active trader and investor in the stock, commodities, currencies, bond, and property market since 1999. So apart from fundamental analysis and technical analysis, he is also a practitioner of the relatively unknown but amazingly accurate cycle analysis to improve the probability of winning in different investment asset classes. So Derrick has developed a proprietary three-dimensional Timing and You relative risk index, which is probably the first of its kind in the world that combines cycle analysis, technical analysis, and fundamental analysis parameters to give holistic risk-reward assessment of the US stock market. So Derrick is a 2019 World Excellent Young Leader awarded by the prestigious 亚洲周刊 for his vision, courage, and influence to drive positive change and be a force of good for good in the world. So he has been featured in numerous media in Singapore, Malaysia, and Indonesia. So Derrick, are you ready to rock the house tonight?
All right.
All right, cool. So I'm making you the presenter right now. So you may proceed to share your screen.
Okay.
Okay, and show your webcam.
Show my webcam.
All right. Excellent. Seeing you. Yeah, seeing your webcam right now.
Okay. Hi. Thank you, Shane, and thank you, Kananga, to invite me over here again to share you guys about this. Tonight is something very different. It's not about cycle analysis. It's actually about technical analysis. All right. So y'all can hear me loud and clear, right? Shane?
Yes, can hear you and see your slide webcam, perfect.
All right, good. So if that's the case, then allow me to share my. Are you looking? You're also looking at my slides, right?
Yes, correct. We are looking at your first slide.
All right, so good. Good, ladies and gentlemen. So tonight our topic is actually how to profit from chart pattern in Malaysia stocks. Yes, even though I'm a Singaporean, but ladies and gentlemen, I frankly tell you guys, I do trade Malaysia stocks. All right, so I personally still have a position in a glove stock in Malaysia right now. Probably later, if I have the time, I can share you guys more. All right, so and yes, I think previously you guys have been hearing me talking about US stocks, all this, but tonight I would 100% talk about Malaysia stock. So probably this will be something very refreshing from you guys. All right, so now let me move on. I don't think I need to share my talk about myself anymore, but whatever I'm going to share tonight is actually it's an experience and knowledge that I gained over my 21 years of stock market experience. Also, probably tonight I have something to share you guys how I make money from the stock market. All right, so now like what Shane has mentioned earlier, whatever we mentioned tonight, any stock or even any asset classes, they are not recommendation or advice. All this is just my personal opinion and views. Also, please take my opinion and view and go and do your own due diligence before you execute any trade. Also, do take note of that. This is very important. All right. So now, I believe you guys attend a lot of so-called webinar session. I have to let you guys know my definition of my time frame. It may be different from other speakers. Also, do take note. Whenever I mention short term, I actually meant less than 1 month. So it could be a few weeks, a few days, or even intraday. This is what I meant by short term. Intermediate term is from 1 month to less than 1 year. All right. So tonight, especially, I will be talking in terms of a short to intermediate term. I will not touch on the long to ultra long term duration. All right. So do take note, short and intermediate term. All right. So now, ladies and gentlemen, yes, tonight is about technical analysis. Also tonight we will be looking at a lot of charts, ladies and gentlemen. So what is technical analysis in very simple term? It's actually a form of analysis for forecasting the direction of prices through the study of past market data, preliminary price and volume. Also, this is what technical analysis is all about. And on top of that, we need to understand three principles of the technical analysis. Ladies and gentlemen, please bear with me for probably the front part is a bit maybe technical, maybe a bit dry, but later on, when I share you guys so-called examples of the chart patterns, it will get interesting. But we need to go through the theory part first. It's just like you learn how to drive a car, you need to go through the paper exam first, right? Then before you hit the road, same thing. So initially, probably a bit dry, but please bear with me. So for the TA, we need to consider three principles of TA. So the first one is market action discounts everything. That means when we do TA or technical analysis, we do not look at fundamentals like what? Like balance sheet, like price to earning ratio, all these so-called fundamental indicators. We don't do that. We specifically look at the price chart because for TA or technical analysts, we believe that stock prices, whatever information about the company is already reflected in the stock price. Also, stock prices actually quickly incorporate new information as soon as possible when it becomes available. Once news is released, stock prices will change to reflect this new information. Also, we will specifically only look at price chart. All right. So number two, history tends to repeat itself. Why do I say that? Because in the stock market, it's mainly governed by two emotions, which is greed and fear. And I can tell you, ladies and gentlemen, no matter where we are, be it in Singapore, Malaysia, Indonesia, China, Hong Kong, everywhere, how human beings of each different country react to greed and fear everywhere is the same. Also, because everywhere is the same, that's why there is this tendency for history to repeat itself. All right, the repetitive nature of the price movement is attributed to market psychology. In other words, investors tend to provide a consistent reaction in similar market events over time. That's why when you know how to read or identify chart patterns, ladies and gentlemen, to me, this is a living skill. That means you can actually, once you learn how to recognize all these chart patterns, you can make money, be it in Singapore, or even for me, I'm a Singaporean, I also trade Malaysia stocks. I trade US stocks, Hong Kong stocks. Also, so this is a second important thing to take note. Number three, prices move in trend. Technical analysis believe that prices trend directionally, actually only three directions, either up, down, or sideways. But tonight, we will specifically talk more on the upside, so that we can make money as the prices go up. All right, so now, ladies and gentlemen, so tonight, this is what I will be sharing is about chart pattern. It's actually a pattern form within a chart where prices are being graphed. This can be applied in stock, in commodities, or even in foreign currencies. Also, when data is plotted, there's actually a pattern. So, ladies and gentlemen, so tonight I will show you guys some of the template of all these chart pattern, so that next time whenever you see this kind of chart pattern, you know that hey, maybe a strong price movement may be coming up next already. All right. So right now, let me go into the one of the chart pattern that make me a lot of money. So what I hope y'all can do right now is take a piece of paper and a pen and please write it down. The next chart pattern I'm going to show you guys is my personal favorite, and I find the most profitable chart pattern you can find anywhere out there in the market. And this chart pattern is what we call cut with handle, ladies and gentlemen, or cut with handle. Why is it called cut with handle? Or you just think of it as a cross sectional view. This is a cup, All right, and this is the handle. All right, so this is how it works. Now I'm going to show you guys the criteria for cup with handle. Then we'll go through some examples. All right, so now this is the criteria. First, we need to have a proud uptrend. That means what? That means we need to have a proud uptrend first before we form a cup and then a handle. So a proud uptrend is important. That's the first point. Second, the base depth should be about 15 to 30%. That means what? That means after we have a proud trend, the price corrected, or the depth of the cup is about 15 to 30%. That will be good. But do take note, in severe bear market, the depth may be 40 to 50%. Example, we have a deep correction in February, March this year. Also, for some of the cup and handle out there, it may be as deep as 40 to 50%. But on average, 15 to 30% is what we consider good. All right. So this is a cup. Also, the depth is about 15 to 30%. All right. So can you see the price came down? It goes up. This will be the cup part. And then we form the handle. Can you see? So next will be the handle. Before we go into that, the base length, that means the minimum length for the so-called the cup and handle is 8 weeks or at least 2 months. All right. It can be much longer than that. It could be several months or even a year or more, but minimum is 2 months. What does that mean? That means from the cup, it goes down this cup, right? Until the handle, the whole base length should be about at least 2 months. The longer, the better, actually. All right. So then we talk about the handle. The formation handle generally takes about 1 to 2 weeks. All right. Volume in the handle, that means the trading volume, should be light. All right. The depth of the handle should be about 10 to 12%, and it should form in the upper half of the base of the cup. Example, the whole base length of the cup with handle is about 8 weeks, right? So for the handle, the duration of the formation of the handle should be much shorter than that of the formation of the cup. Also for the handle, it's about 1 to 2 weeks, and the handle should be within the top half of the cup. That means it's above, let's say this is a depth, it should be above in the so-called upper half of the cup. That will be what we call a good handle. All right. Then when is the ideal buying price is here. After it formed the handle, it break up. The breakage of this resistance here, all right, is a good point to enter because that is a point of least resistance. All right, so do take note, it's something like this. The price come down, then it goes back up, close to the high over here. Then it so-called pull back to form a handle. Then it break up above the handle, or we should buy once it start to break up and try not to chase more than 2% above the breakup. All right, so this is what I meant by this. And the very important thing is the last point, ladies and gentlemen. Wherever we have a breakup, we want to see a volume increase on the day of breakout. That means we want to see volume increase 40 to 50% above average. Also, ladies and gentlemen, these are the 6 criteria for us to take note how to identify a cup and handle. So just let me recap again. We need to have a proud uptrend, then the formation of the cup, then the handle, then a breakup. When we see it break out, we want to see good, strong volume on the day of breakup. Also, we have covered the theory part, ladies and gentlemen. So now let's look at an example. Of course, in Malaysia, I want to mention this again. This is not a recommendation or advice. This is just for education purpose only. All right. Also, ladies and gentlemen, just take it as an education so that next time whenever you open out a chart, you can learn how to recognize a cup with handle for this case. All right. So now, ladies and gentlemen, this is UWC. This is a chart of UWC. Can you see? We have a proud uptrend. Then the price came down to form the cup. So this is the cup, ladies and gentlemen. Then it has once it's near to the resistance, this red resistance line here, it pull back. This is what we call a handle. So the point to enter will be when it break up above this red resistance line. Also, this UWC from about 320, it corrected to around $1. Right, about 50% for this case, about 50% so-called drop. Why? Because this was during the early this year during the COVID-19. So that's why, like what I say, a deeper correction is resulted because of this. All right. So it came down, formed the cup. Can you see? Then it formed the handle. Then it break up, ladies and gentlemen. And can you see when it break up, the volume below is actually the trading volume. Can you see the trading volume increase as compared to previous day? Can you see that? So all these criteria, 6 criteria, has been satisfied. Also, if let's say the so-called the resistance here is 3.2, let's say, so we can enter 1 or 2 bit above 3.2. That will be the ideal entry point. So can you see after we enter already, the price went up from about 320, it went as high as about $6 plus. It's almost 100% increase. Ladies and gentlemen, I can tell you this cup and handle is a very profitable chart pattern. This cup and handle has made me a lot of money for the last 21 years in whatever so-called country stock market that I trade in, be it Singapore, Malaysia, US, or even Hong Kong, or even Indonesia. So learn this well, ladies and gentlemen. Learn how to recognize this. A very good example, UWC from 320. Once you learn how to recognize it, it actually rally 100%. Can you see? Now, ladies and gentlemen, can you see? Now UWC, it has a proud uptrend. It has pulled back from about 60 something. It has pulled back to about 528. It seems to have formed a cup. Ladies and gentlemen, it's probably forming a handle. I don't know. So ladies and gentlemen, so if you all got what I'm trying to tell you, also then that'll be good. All right. So this is for UWC. Let's look at another example of a cup with handle in Malaysia market. This company called Inari. All right, so can you see we have a proud uptrend. Then the price hit a resistance at around 190, 192 over here. Then it pulled back down to around 97 over here. So can you see? So this is actually, then it went back up. So this is the cup. So can you see? This is the handle. So once it break up above the resistance, ladies and gentlemen, when it break up, can you see the volume pick up as well? Also within about 4 days, it actually went up from about 190 to around 230. Then it went through another so-called chart pattern again. Also, ladies and gentlemen, my take is this: learn how to recognize this cup and handle. This should form as a template in your mind, so that next time, whenever you see any chart that somehow display such a cup with handle pattern, ladies and gentlemen, go and do more analysis on it. Probably once it break out, it may make you good money. All right. So this is Inari. Let's go and look at another example of a cup with handle. This is JCY. So can you see we have a proud uptrend. Then for about 35 cents, it came down to a low around 10 cents. Then it goes back up. This is what we call the cup. All right. Then there's a pullback. This is a handle. So once it break up, can you see the volume also went up? Ladies and gentlemen, this breakup, this over here is what we call the point of least resistance. So once it break up and we see such high trading volume, ladies and gentlemen, voila, can you see from about 35 cents, it goes as high as 80 plus 90 cents. So can you see, learning how to recognize chart pattern is very important. So once you know how to recognize it, there's a very high chance that after it break out, the price will probably rally from there. It may not be as high over here, but normally once a good chart pattern has formed, be it a cup with handle or other chart pattern, once it break up, normally it should have a good rally, like what we see in UWC, in Inari, as well as in so-called JCY. All right, isn't this beautiful? Over here, we don't enter here, because once we enter here, the price is not going anywhere. Or we let the so-called the stock work its way up to form the cup, then form the handle. Once it break up, we enter 1 or 2 bit above the breakup point. And once we see this good high volume, ladies and gentlemen, most likely it should be a good breakout. And for this example, it went up from about 35 cents almost to 90 cents, about a 200% increase. Isn't it beautiful? All right. So ladies and gentlemen, so this is cup with handle. This is my personal favorite, I can tell you. All right. So now, let me share you guys the next chart pattern. It's called saucer with handle. It is very similar to cup with handle, very similar. It's just that instead of the cup, we have the saucer. The saucer tend to stretch out over a longer period of time, making the pattern shallower. The base depth is about 12 to 20%. Remember, cup and handle is 15 to 30%. But for saucer with handle, ladies and gentlemen, it's only 12 to 20%. That's why it's more shallow. That's why it's called saucer instead of a cup. Also, all the criteria basically are the same. For saucer and handle is most, I would say most of the criteria are the same. It's just that the base depth is more shallow, 12 to 20%, and the duration, remember, cup with handle is at least 2 months. The duration of saucer with handle is probably longer, like 3 months, 4 months, and half or half a year. Let me show you guys a very good example. This is a stock that everyone, at least Malaysian who play the stock market recently should know about this stock. And this stock is what we call the 四大天王. One of the 四大天王 is actually called Kananga. All right, one of the famous out of the 4 glove stock in Malaysia, right? So now, ladies and gentlemen, so this is a good example of a saucer handle. Can you see first? Can you see the price about 580? It came down. It hovered for a long time. All right, the low is about 450. So from 580, it dropped to 450, probably less than 20%. Can you see? So it formed a long saucer. So then it formed a handle. And can you see once it break up, the volume increased so much higher. And then from 5.58 cents, it goes all the way up. Highest it reached about is around $19. So ladies and gentlemen, can you see? Once you learn how to recognize this kind of chart pattern, this is the place that we will buy. Try not to chase. Also imagine you will buy at around maybe 580 or 590 or $6. You will be in so much earlier than a lot of people out there. So as the price goes up, a lot of latecomers who come in to buy Kananga because of FOMO, fear of missing out, you will probably be the one selling it to them. All right. So ladies and gentlemen, can you see from about 580, it goes all the way to $19. So this is about 4 times return. No? So can you see this saucer handle is also a very profitable chart pattern. So let's look at it again. 580. Then it formed a saucer. This saucer, it took from last year February until probably this year, it took about almost 1 year. This saucer plus a handle plus a breakout, this whole saucer with handle, it took about 1 year. This is what we call accumulation. All right, so then once it break out, ladies and gentlemen, look at this beautiful rally. All right, so now let's look at another example of a saucer handle. This is what we call SKP resources. All right, same thing, ladies and gentlemen. Can you see from about 140? So SKP resources, it has a pullback in the price. It formed the saucer from last year around October. It formed the saucer part until here. Then can you see there's a pullback? This is the handle part. So the saucer was from last year October all the way until this year August. so it's about 10 months. So if then form the handle, then once it break up, ladies and gentlemen, can you see the red circle over here? Once it break up, can you see the volume pick up as well? And the rest is history from about 140. It goes all the way up. In this chart is about 230. So what I want you all to take note will be, can you see, this is the saucer, this is the handle. So it's about last year October until August this year, so it's about 10 months. So this is a 10-month saucer with handle. So once it break up, the volume increase as well compared to the previous days. And voila, ladies and gentlemen, from about 140, it slowly rise up to 230. So can you see, ladies and gentlemen? Also, this is another very profitable chart pattern called saucer with handle. It's similar to cup with handle. It's just that the depth of the cup, the depth of the base is so much shallow, and the duration of the saucer and handle is much longer than the cup with handle. All right, can So now, next, I'm going to share you guys another very interesting chart pattern, and a very profitable one. Is actually called double bottom. Double bottom. Or very simply, is something like a W, opposite of McDonald. McDonald is M. So double bottom is like W. Also, what happened is we need to have a proud uptrend, like the cup we handle, proud uptrend. Then the price corrected. It goes back up. This is what we call the first leg of the W. Then it pull back again. Then it goes back up again. So this is the second leg of the W. Also, once the price break above the middle peak here, that will be the entry point. Also, just remember for double bottom, we just remember it's a W. All right. So now I'm going to share you guys the criteria for double bottom. So first one is it need to have a proud uptrend. Can you see? Just like cup with handle, it need to have a proud uptrend. Then the price pull back. Can you see? So the depth of this double bottom is 40% or less. That means from here, the top to the bottom here, or it should be less than 40%, the depth of this base. All right. Third one, the base length should be at least 2 months. Like the cup with handle is at least 2 months. What does this mean? That means when the price came down, goes back up, comes down, goes back up again, this whole length of base should be at least 2 months, at least. The longer, the better. All right. Yeah, so please copy this down. All right. Number 4, the peak in the middle of the W, it should form in the upper half of the base and should be below the left side peak. What does it mean? This actually means that as the price came down, then it bounced up. This peak here should be in the top half. It should be as close to this high here as possible. This peak here should be as close to this as possible. All right, or at least it should be in the first half, the top upper half of the base. This is what it meant. So the pit in the middle of W should form in the upper half of the base and should be below the left side pit. I repeat again. Price came down, it goes back up. This pit in the middle of the W, it should be as close to this high as possible, or at least it should be in the top half, upper half of the base. All right, so then it pull back. So for the bottom of the second leg, the best is lower than the bottom of the first leg. What do I mean by that? That means after it forms the pin in the middle, when it comes back down, this bottom of the second leg, the best is to be lower than this. Or sometimes it can be so-called same level, or it can be slightly above, but the best is it undercut the first so-called bottom. Why? This is to create a shakeout of the weak so-called investors. Why do I say so? Because can you imagine there are people who bought here, right? So the price went up, then they're very happy, right? For those who bought here. Then as the price came down to where they bought now, then they will say, oh, yeah, I should have sold here, I didn't sold. So now it's back to my break-even point. Then as it gets lower, all these people who bought here cannot take it, they will sell. So once enough selling has been taken place, all the weak holders have been shaken off, and the buying so-called enthusiasm come back, then the price will be pushed upward. So it's best to have the so-called the second leg to go lower than the first leg. Not necessary, but it is better. All right. So double bottom may also have handle, although this is not essential. So do take note, double bottom may have handle like cup with handle or saucer with handle, but it's not essential. Do take note. All right. So same thing. The ideal price range is this. Once the price goes up and goes above the middle of the so-called the pit in the middle of the W, or we should enter to buy when it break up above this resistance here. And we try to, let's say this resistance here is $1, example, we should buy 1 or 2 bit above this $1 resistance. Try not to go beyond 2%. All right. Lastly, on the day of breakup, we want to see volume 40 to 50% above average again. Also recap, ladies and gentlemen, for double bottom, we need to have a prior uptrend, the price pullback. This is the first leg, then it goes back up. Also, the pit in the middle of W should be as close to this high as possible. Then it pull back. The second leg is the low of the second leg should undercut the low of the first leg. That's the best. Then it goes back up. Once it break up above the pit in the middle of the W, that will be a good entry point. And when it break up, ladies and gentlemen, we want to see high volume coming together with the high breakup. Also, we have gone through the so-called the theory part, ladies and gentlemen. Let's go through the few examples. Do you know that our sponsor for tonight, Kananga, actually is stock display a double bottom before? If you don't know, this is the chart. Around May this year, can you see there's a pro uptrend? So this is the first leg down. It goes up. This is the peak of the W. Can you see this is the W? And there's a handle for this case. Remember? So pro uptrend, it came down, it hit a resistance of around 62 cents. Yes, 62 cents. It pulled back to this blue horizontal support line at 53 cents and goes back up. So this is the first leg. Then it came down, formed the second leg. It goes back up. Then this is the handle. So can you see once it break up, ladies and gentlemen, look at the volume as compared to previous day is so much higher. So can you see? And that's why from 62 cents, sorry, from 62 cents, it went up to about even close to $1. Not exactly $1 plus 90, but 90 plus cent. So from 60 plus to about 90 plus, wow, it's about 50% increase. Can you see? So if you know how to recognize a double bottom, probably Kananga will have given you a very good present when it break up in around middle of July. Can you see? And from there on, it went up from about 60 plus cent to about 90 plus cent, a 50% increase. All right. Then probably some going to say, hiya. If I recognize the chart pattern earlier, then maybe I'll make this 50+%, right? Don't worry, ladies and gentlemen. All right, that's why I always come back for Kananga webinar, because Kananga always invite speakers like me or other good speakers to come in and provide your education so that y'all can so-called learn how to recognize all this chart pattern and make money. All right, so this is a good example of a double bottom, ladies and gentlemen. Let's look at another example. In fact, let's go back to Inari. Remember, I talked about Inari in the earlier part as an example of a cup with handle, remember? So this is the cup, this is a handle. Okay, so let's go to Inari. Inari, can you see? This is the cup, handle, and when it break up, it hit a resistance around 240, around here. Then can you see? It came down. So this resistance here, why is this a resistance? Because the price went up, it hit this resistance, it came down, can you see? Then it goes back up. When the price came back to this resistance here, it pulled back. Then once it break up, ladies and gentlemen, whenever a resistance is broken, later on, it will reverse its role as a support. So that's what happened. Can you see the price went up to about 240? It came down, just nicely touched this support turn resistance, which is about 198 around here. Then it went up. So this is the first leg of the W. Then it came down, then bounced back up again. So can you see, ladies and gentlemen, this is the W. Then for this case, there's a handle. So it broke out actually a few days ago. And when it broke up above this so-called double bottom, ladies and gentlemen, can you see the volume actually increase as compared to the previous days? So can you see, ladies and gentlemen? So can you see for this example of Inari, it has formed a cup, a handle, it break up with increased volume. It rallied very strongly for about 4 days. Then it formed a double bottom with a handle. Then about 4 to 5 days ago, it break up with increased volume. So the ideal buying place will be when it break up. So the resistance was around 240, around 240 like that. So probably we will buy one. We can buy 1 or 2 bit above 240 as it break up. So can you see we have 2 chart pattern within one chart? All right. So this is example of a double bottom. Okay. So now, ladies and gentlemen, let me introduce to you guys another very interesting and profitable chart pattern called flat base or rectangle. All right. Normally, rectangle in simple term we call it rectangle. Okay. It often form after a stop, form a cut with handle or double bottom. So this is how it looks like. A rectangle, you have a pro uptrend, like a cup and handle, also like the double bottom. Then it goes back and forth, up and down within a very tight range. All right. So we can draw a resistance line here and a support line here, and an entry point to enter into a rectangle is when it break up above this resistance. Okay, so let's go through the criteria, ladies and gentlemen. These are the criteria. Also, do take note of it. So first criteria, proud uptrend. Yes, like what I say here, there's a proud uptrend. Second criteria, the base depth is 15% or less. That means the depth of this rectangle should be 15% or less. That means if let's say the resistance here is $1, on the support here should be about 85 cents. Okay, so that means the price is consolidating within a very tight range of 15% or less. All right, and the base length is at least 5 weeks. That means also about 2 months or slightly more than 2 months. In fact, the longer the better. That means this consolidation should be as long as possible, but at least 2 months or 5 weeks or slightly more than 2 months. All right. So the ideal buy range is 2% above the resistance. That means here, after it consolidated, so once it break up above this resistance, if this resistance is $1, so we'll buy 1 or 2 bit above this $1 and try not to chase more than 2% above $1. That will be the ideal price to enter. All right. Same thing. The volume on the day of breakout, we should see 40 to 50% above average. That means when it break up out of this consolidation or rectangle so-called pattern, on the day of breakout, we should see volume increase as compared to the previous day. Okay, so ladies and gentlemen, so these are the criteria. Let's go and look at some examples. This is a company in Malaysia called Pol Kong, a gold jewelry company in Malaysia, I believe. So come, ladies and gentlemen, can you see? It has a proud uptrend. Can you see Pol Kong consolidated within a very tight range between about 54 cents and 46 cents? Can you see? It consolidated within a very tight range from about middle of April, and finally it broke out towards end of July. So this is about 3.5 months. Can you see? It went through a 3.5 month consolidation, or what we call the rectangle or flat base. So can you see, once it breakout, can you see the volume is so much higher than the previous day? So from about 54 cents, it went as high as 180. Look at the rally, 54 cents to 180. This is about how many times? About 3 times, no? Also, that's why, ladies and gentlemen, next time, when you open up a chart, you see something like this, a very tight consolidation. You got to be very excited, because this possibly, once it break out, can you see it can really rally very strongly. Of course, one of the reason so-called Pol Kong rally so strongly, because during a July period, the gold price also rally very strongly. So there was a theme, there was a story then. But if you know how to recognize chart pattern, for this case, this is a flat base. Once it break out, you enter to buy around, let's say 55 or 56 cents. You ride the trend up. Don't need, let's say $1, you also almost up by 100%. If you exit at 150, you are up by probably 200% within a very short period of time. All right. So this is an example of a flat base or rectangle. Let me show you guys another example. This company called Hai-O. So ladies and gentlemen, this is Hai-O. Can you see Hai-O form a flat base? Here, it has been consolidating between 175 and 163. Can you see it has been consolidating within a very tight range, forming what we call a rectangle or flat base. So once it break up, can you see the volume increase a lot? Also from about 175, it went up, slow but steady, until 267.5. So now, ladies and gentlemen, can you see from about 175, it went up to 275, is up by about $1 after it break up from so-called this flat base. So then, can you see from about 257, oh sorry, 267, it pulled back to form a cup. Can you see this is a cup? Then this is the handle. So once it break up, ladies and gentlemen, can you see the volume pick up as well? And from around 267, it slow and steadily went up to almost $4. Also, ladies and gentlemen, so can you see we have a flat base here, which is how long it took. This was from about end of March until June, so it's probably about 3 months. It broke up, then it slowly went to about 260 plus, then it formed another cup and the handle. So once it break up, there was increase in the trading volume, and voila, from about 267, slow and steady, it goes up nearly $4. Very good return. All right. So that's why, ladies and gentlemen, because of a constraint in time, there are still a lot of chart pattern out there. But the thing is, these are the few chart pattern, especially this one, cup with handle. it make me a lot of money. Also learn how to recognize this product trend, a cup, a handle, breakout, enter. All right. And this is the criteria if you need to copy. Product trend, the base depth is about 15 to 30%. The base length is about 2 months. The duration for the formation of handle, it is much shorter than the formation of the cup, but it's about 1 to 2 weeks for the formation of the handle. All right, and the handle, the depth of handle should be about 10 to 12%. One thing I want to share you guys is this: the handle, it should not go all the way into the lower half of the cup. That is too deep already. So a good handle should be like this. This is the cup. A handle should be a mild pullback, a very mild one, about 10 to 12%. So once it break out with increased volume, ladies and gentlemen, that probably should be a very good cut with handle. All right, and on the day of breakout, we should see volume coming in. Also learn how to recognize cut with handle. I make a lot of money out of it, and if you know how to recognize it, it's everywhere in the stock market around the whole world. I traded cut with handle in US stock market, in Malaysia, in Singapore, in Hong Kong. So I can tell you this is a very profitable chart pattern. All right. The second chart pattern, let's do a recap, is a software with handle. The depth of the so-called the base is not as deep as that of a cup. The cup, the depth of the cup is about 15 to 30%, but for the software with handle, it's only 12 to 20%. So the depth of the base is much shallow, and the duration of the so-called saucer is also much longer than that of the cup, as you can see here for Ataliga, or a very long saucer together with a handle, breakout, we increase volume, and voila, look at this beautiful rally. All right, and another chart pattern is what we call a double bottom. It's something like a W. So when you have a pro trend, this is the first leg down, goes back up. The peak in the middle of W should be as close to this high as possible. Then it begins a second leg down. This second leg, the best is to undercut the first leg here. Then as it rally, when it goes back up above this peak in the middle of W, that will be a good entry point. Also, this is a criteria. Pro trend, the base depth should be 40% or less. The length of the base should be at least 2 months. And the peak in the middle of the W should form in the upper half of the base and should be below the left side peak. And the bottom of the second leg should be lower than the bottom of the first leg. That is the best case scenario. All right, and double bottom may also have handles, even though it's not essentials. Same thing, the ideal buy is when it break up above this peak in the middle of the W. And when it broke up, we want to see strong volumes. A very good example is like Kananga. This is the W. This is a handle, broke up with good volume. Can you see from about 60 plus cent, it went up to 90 plus cent. This was a present for Kananga to you guys. Then, all right. So for those of you who got it, good for you. All right. So Inari, can you see a W, a handle, break up few days ago. with the so-called increase in volume, and it slowly starts to go up. Of course, we have the flat base or the rectangle. All right, so the criteria is this. We have a prior uptrend. The base depth is 15% or less. Over here is a prior uptrend. That means we have a very tight range, a consolidation range. The depth should be about 15% or less, 15, and the base length should be 5 weeks. All right, the ideal region to buy will be when it breaks up above this resistance. And we try not to chase more than 2% above this resistance. All right, and same thing. On the day of the breakout, we want to see big high volumes. So a good example would be like Pol Kong. Can you see a very tight consolidation range for about 1 month, 2 months, 3 months, almost 3 months plus consolidation of flat base or rectangle. Once it break up from about 58 cents, look at the when it break up, the volume increase 58, it went to about 180, the highest. So another example is a high O. Can you see? Consolidated for about 3 months or so. So once it break up, went up slow and steady, then it form a cup with handle. So after it breaks $2.68, it goes as high as to $4. All right. So ladies and gentlemen, so I've just covered some of the very profitable, very interesting chart pattern. So probably now we can go through some Q&A together with Shane, so that maybe we can look at some charts together to see whether we can spot some chart pattern. How about that? Also with that, I'll hand the time back over to Shane.
Thank you so much, Derrick. Yeah, so if any question to ask Derrick, let us know in the Q&A box. And if you want Derrick to dissect any charts, also type in the box. If you have time, we can do more. If you don't have time, we can do less. Derrick, your webcam disappeared already.
Disappeared. Oh, okay.
Yeah, okay. So yeah, in regards to the questions, there are many questions that the participant asks in regards to your strategy, because just now Derrick has shown us a couple of chart patterns that you consistently use it to make money in the market. So you talk about buy strategy. So could you tell us, like, from all the chart patterns, what are the exit strategy? What kind of pattern should we look out for when it comes to exit?
No. For exit, there are
when to
other.
sell.
Sorry.
So yeah, the question, many people are asking like when to sell. Just like talk about when to buy. Yeah, when to sell.
Okay. All I want to say is this: once we recognize all this chart pattern, right? This chart pattern is like a platform. So once it break all this resistance, for example, let's look at the case of, let's say, Kananga, example. No, are you all looking at my slides?
Yes, correct. We are seeing your slide.
So you see, so example, we are in Kananga. I mean, after it form a double bottom, it break out. So as the price goes up, right? So what we can do is we can draw a uptrend line. Can you see my arrow?
Yeah.
We can draw an uptrend line here. So if let's say the price came down and break this uptrend line, that's a point we can exit. Yeah. How about we look at the live chart? I think that would be easier. Shane, how can I share my, if I want to show a website?
Yeah, you can just exit your PowerPoint and go to the website. We are seeing your screen. So wherever your screen is, wherever you're looking at your screen, we are seeing it. So you just exit, yeah, and go to your Google or TradingView or investing.com. Yeah, we are seeing it.
So since we're talking about Kananga, right? So let's look at Kananga. So this is the chart of Kananga. Please allow it to some time to load. So I turn it into a candlestick. So ladies and gentlemen, let me just redraw the double bottom again. Is here. So resistance line, I will use red color, all right? Then a support line, I will then draw another support line. So support line, I will use blue color. So ladies and gentlemen, this is Kananga. Can you see this is the double bottom and the handle. When it break up, volume increase. Can you see? So as it goes up, how can we exit is the question. Let's example. We can draw trend lines. There's no one fixed method to exit, but I'm just showing you guys probably one of the method to exit. So ladies and gentlemen, so can you see the price goes up and down and touch this support line and goes back up, touch this support line, goes back up. So this blue uptrending support line is supposed to give support to so-called Kananga, I mean the stock. So once the price came down and break below this support line, so that is around maybe 88 cents, that could be one of the place we can exit. Another way is this. Today I don't have the time to teach this, but ladies and gentlemen, in candlestick pattern, there's this, can you see this green candle and this red candle? This red candle actually so-called engulf this green candle. So this is actually what we call a bearish engulfing chart pattern. So another way we can exit is once we see a red candle engulf a previous candle, this is something bearish, we can exit the next day below this candle's low here. So the candle low here is about 89 cents. So we can exit 1 or 2 bit below 89 cents. It's around here also. It's just like it break below this blue uptrending support line. That this is also a place we can exit. Also, there are several ways. This is just two of the way we can exit to lock in the profit. All right, Shane.
Okay, so yeah, just now you talk about the buy strategy, and also you talk about the exit strategy by looking at the trend line and also possible candlestick reversal candlestick patterns. So could you also share with us what are the areas where we need to cut loss in case that the market goes against us? What is the strategy for cut loss?
Okay, probably since we are talking about Kananga, one of the place we can cut losses, that's a very good question. After we enter to buy a stock, please don't keep on thinking about how much money we can make. This is a mistake that a lot of people make. The first thing we should think of is after we enter into a stock, we should take care of our downside. That means we should prepare to cut loss if we are wrong. Always remember this, take care of our downside and the upside will take care of itself. All right. So for this case, ladies and gentlemen, can you see this is the double bottom? So this is the handle, right? So can you see? I can actually draw a support line here. Can you see this blue support line here? Because the price went up, it came down, touched this support line, and it goes up. So this about 587 is a support. So we could have entered to buy when this stock Kananga break above this resistance of 62 cents. But let's say instead of going up, it comes down and cut below this so-called support of about 58 cents. If it cut below this support, this can be a place whereby we can cut loss. That's one way. Another way is we can draw a trend line. Can you see? I connect from this point to this point. So if the price goes up, it came down, break this blue uptrending trend line. This is also another place we can cut loss. Also, this is a very good question. So first thing after we buy, first thing is we should think of, in case we are wrong, where we should cut loss. All right. So if the price didn't, for this case, it never come down, so we never cut loss. Instead, we ride the trend up until probably around here, we can exit to lock in our profit. All right. So this is an example. Back to you, Shane.
All right, so thank you so much for sharing your stop loss strategy in case that the market go against us, or the stock that goes against our initial planning. So
Yeah.
there are so many questions that were asking you to dissect the companies, but I look at the screen right now, I think most are asking there are some tendency that they were there are more that ask on the glove related counter. So could you look at this glove counter called Top Glove? I'm sure a lot of people are interested because some say that it just recently break out from the downtrend line. So could you please dissect the chart for us, please?
Yes. I know a lot of people is very interested. So let's look at Top Glove. Yeah. Top Glove. So ladies and gentlemen, this is Top Glove. Very interestingly, let me just share you guys. Let me just zoom out of Top Glove. I don't know whether y'all can see what I'm seeing. Can you see Top Glove has been consolidating, I mean, for a long period of time. Then it went up, then it consolidated again. Then finally, when it broke up from $2, it went all the way to $10. Sorry, that's when you get free stuff. Also, but anyway, so this is Top Glove right now. Like what it was mentioned, we do see that it has broken above this so-called downtrend line. All right, so it is now approaching this resistance line here. Can you see this high here? Let me turn it into red color. Can you see how it's now approaching this? I don't know what's the question they are asking me to do what. Sorry, Shane.
Yeah, just to dissect the top curve charts, you know.
No. So one thing good is this is it has broken above this downtrend line. My take is this: if top glove can break above this high here of $9.765. Today closed at 909. If we can clear this so-called 9765, it will probably have more upside to go. But provided it need to clear this 9765 here. If you ask me, I don't know whether it can or not, but the thing is, can you see? One thing I want to share you guys is this: don't just look at stock price. You guys got to look at the correlationship between price and volume. So can you see top glove has a big drop from, here, then it went back up. So can you see when the price went up, like this green candle, the volume pick up. This is something good. That means price goes up, volume goes up. This is something good. As compared to price goes up, but the volume shrink. That's no good. But can you see as the price goes up, can you see this candle over here? The volume also went up, another good sign. So as price goes up, volume pick up. Price goes up again, volume pick up again. So can you see whenever there's an up day, volume pick up, which is good. So hopefully, my take is let's watch out. If it can come here around 975, probably pull back, probably form a handle. It can break up above 9765 with very high volume. Hopefully like that, we should be probably seeing top glove going higher from here. All right, so this is my view about top glove. Probably.
Okay.
Yeah. Can I share another glove stock or we move on?
Sure. You can share another glove stock.
Wait, I'm a Singaporean, but this is a stock that I own. It's called Hatalega. I sold half of my position, but I'm sharing you guys how I do my trading so that y'all can probably get some clues from here. So where did I first enter into Hatalega? So this is the resistance line. I have to say this, I didn't buy at the exact bottom. I have to let everyone know I'm not so good until I can buy at the lowest, I can sell at the highest. At least I can, and Warren Buffett cannot. So if you can, then probably I will want to learn from you. All right. So, but the highest price for Hatalega was around here. All right. Let me turn it into a red color line. Also, what happened was this. Can you see Hatalega? It came down, goes back, touch this recent line, came down, touch, And can you see it broke up here? I bought when it break above this so-called resistance line over here. I didn't introduce this chart pattern tonight, but ladies and gentlemen, this is what we call a head and shoulder. This is the left shoulder, this is the head, and this is the right shoulder. This is actually the neckline. So once it breaks the neckline, it came down. So it goes back up. Can you see? Remember earlier I mentioned, once this used to be a support, once it's broken, it will then reverse its role to be a resistance. So once it's broken, it used to be a support, now it will turn to be a resistance. That's why the price went up, hit this so-called resistance, it came down. So once it cleared this downtrending resistance line, and once it break above this resistance line, that is where I entered to buy. I think I entered to buy around 15 above 1530 something, I remember. Or I exited half around here, about 17. Now I'm waiting, ladies and gentlemen. Can you all see? Can you all see? There's actually a resistance line here. Yeah, I want to say this. These are not recommendation. This is not recommendation. All right. Do take note. But it seems that this probably is another chart pattern that I didn't talk about it tonight. Can you see the price came hit this resistance, it came down, went up, hit this resistance, it came down, touch this so-called blue uptrending support line. Can you see? So it seems to be forming like what we call a mini ascending triangle. This is another chart pattern, but I do not have time to share tonight. 1 hour is a bit short, but I do see that we may have a mini ascending triangle. Once it can clear this resistance, if I'm saying if it can clear this resistance, we probably will see Hatha Lega rally higher. Probably goes up to is this high here, which is around 2116, provided that this resistance can be broken. So can you see what I did was I entered around 1530, I exited 17. I remember I have about 10 to 11% profit. I sold half my position, I'm left with another half. So I'm now waiting to see whether Hatha Lega can break above this resistance. If it can, it may go higher. Then probably if it once it touch around 2021, I'm going to exit my so-called remaining half. This is a real trade that I do. I'm showing you guys this big. Why? Because I want to show you all, even though I'm a Singaporean, I'm not a Malaysian, but yet with the knowledge, all this just now, all the chart pattern knowledge that I have, I also can make money in Malaysia stock market. All right. Okay, so with this, I'll pass the time back to Shane.
All right, thank you so much, Derrick. So that will conclude our webinar today. So we have exceeded the session by 15 minutes, overshoot already by 15 minutes. So Derrick, you have any?
It's okay. It's okay because I think probably you guys, maybe because of CMCO, you all have more time. I'm okay if we can see more. Or if you all want, we can recognize more chart pattern if you want. If you all want.
So you,
if not,
okay, you
we
still
can
want to
stop
do?
here.
You can do one more, right?
Up to you all, because probably
Okay,
you all
there's still so
have
many.
time.
Cannot. There's still so many stocks that they put in the chart.
Probably one more.
In the,
Let's do one more.
all right, so let's do how about this technology sector? Of course, so for those asking glove, I think we have got enough of gloves. So let's do a technology stock. How about this EMS company, ATA IMS, okay, which is one of our
ATA.
one of our strongest EMS player in Malaysia.
ATA, right?
Yeah, ATA MS.
Okay, wait,
Yeah,
ATA space.
no space like in our stock code is ATA MS.
Come again, AT?
ATA IMS.
This one,
Wait, let me see.
this one, right?
Yeah, correct. Yeah, should be lah.
ATA
Yeah,
IMS.
correct.
Okay.
Yeah, you know, sometimes it's bracket as ATAI.
Okay. So no. The important is tonight I'm here to show you guys how to recognize chart pattern, right? So let's see whether we can recognize any chart pattern from ATA IMS.
Yeah, it's one of our EMS player in the market beside the VS and also the SK Press, serving clients like Dyson.
Tyson. Client like what? Sorry.
Dyson.
Oh, okay. So ladies and gentlemen, please tell me, do you all recognize a chart pattern here? And later we can look at the most current price, but let's learn something together. Can you see? This is about 45 cents, the resistance. The support here, I turn it to blue. So can you see the resistance is 45 cents, the support is 31 cents. Can you see we probably have a saucer with handle? Can you see when it break up, look at the volume? Of course, this was 2016. This was 2016. It was a 1 year saucer we handle. Can you see? But once it break up from 45 cents, is voila! Look at the way it run until $2. So can you see, if you know how to recognize chart pattern, it's very profitable. All right, so that was a saucer we handle. Can you see? So now let's come back to this moment, because that is over, right? So let's come back to the current moment. What I do see is we have a resistance here. We do have a resistance here at about $2. Let me zoom in now. So today it closed what price? Today it closed 193, highest. So it's very close to this resistance. Can you see? Also, ladies and gentlemen, we probably have a resistance around $2. So probably, can you see, if you look at individual so-called candlestick, this is what we call a very long tail. So that means this about $2 resistance probably is going to be strong. That's why the price goes up. Then for this case, it opened here, the candle it opened here, it goes up because finding this resistance here. That's why it came down and closed here. So this is a very long tail. So this probably $2 is going to be a very strong resistance. based on what I see. All right. But once it can clear this $2, ladies and gentlemen, probably we may have more upside to go from here. If it can clear $2, ladies and gentlemen, I want to say this again. If we can clear the resistance here at around $2, $2 is also a full number. Anything that's a full number in the stock market, like $1, $2, 1,000 point, 2,000 point, all these are strong resistance. So probably $2 is going to be a strong resistance. But once it can clear $2, things will be interesting. All right. Okay. So this is what I can share about ATAMIS. All right.
MS. All right. Thank you so much, Derrick, for
Yes.
dissecting live for us some of the companies that are listed on Bursa Malaysia. So you have any? I think you have some parting words you want to share with us, right?
Yes, correct. Also, ladies and gentlemen, so I've shared you guys some of the chart pattern, which I think if you learn well, ladies and gentlemen, especially card with handle, what you should do is, let me just share you guys what I did. 21 years ago, I read a lot of charts. Until now, every day I'm still reading chart. I've been doing for 21 years. So can you see all this what card we handle, saucer we handle, double bottom, flat base, or head and shoulder, whatever, all these chart pattern, they already form a template in my head already, in my mind. So whenever I open up any chart, I can look at chart very fast, 1 second, every chart. So once I stop at the chart, it somehow the pattern seems to fit into the template in my so-called my mind. I will then do further analysis. So I hope you guys after tonight, it could be just an introduction for you guys. Also go and learn how to recognize all these chart pattern, because I've shown you guys, once you learn how to recognize them, they can be very profitable and you can make money in Malaysia or even go overseas, because like what I mentioned, TA works everywhere, and any human being in the whole world, how we handle greed and fear everywhere is the same. All right. So I hope tonight you all have learned something and you can apply this in your so-called trading. I can only share the chart pattern tonight. If you all want, I can in future, if you all want, can suggest to Kananga. I can come back and share you guys how to probably exit. I just only share you guys a few methods how we can exit. I can show you further like how to use moving average, how to use Bollinger Band, or even some of indicators to do exit. All right. So with this, ladies and gentlemen, I just want to say this. We probably going to see the US bull market continue. But do take note, we may just see a correction because of a US presidential election. Or we may see a correction. Then after that, we should see the US stock market continue to go up. If that is going to happen, ladies and gentlemen, if you know how to spot the right stock in Malaysia stock market with the right chart pattern, when they break out with good volume, you should be able to make good money. I don't think we are going into a US bear market this year. Correction may be coming, but it's not a bear market. A bear market probably should be next year. All right. So with that, ladies and gentlemen, if you want to know how high will Dow Zone rally before this aging US bull market is over, I actually have a free ebook. You all can go to this link, timingandyou.com/download/ebook/ to download. And I think Shane will also put it inside the chat box, right? So that you all can, you all can go to this link to download my ebook. I will show you guys how I apply technical analysis as well as cycle analysis, or to determine how high Dow Zone can go before this bull market is finally over. So it's something very interesting. I combine technical analysis and cycle analysis. As you all know, I do cycle analysis as well. All right, so so y'all can go and read this ebook to find out how I do it. All right. And doing forecast is something very interesting. For example, we can use Fibonacci. I also have my DD7 golden numbers. Probably next time I can come back and share more. If you find me interesting or my sharing useful, probably you can put it in the feedback form so that if the response is good, then probably Kananga will get me back again. All right. So this is the link. Another thing is please, if you want, you can follow me in Facebook under Timing and You. This is my company, Timing and You. Please like it or follow it so that whenever I see any turning point in the market, I'll probably post there so that y'all can be notified. Also, please like Timing and You Facebook page as well. All right. So I think with that, ladies and gentlemen, that's all for me tonight. So I hope you guys have benefited from my sharing. Also, over here, I wish may the timing be with you guys, especially for Malaysian, as the COVID-19 number is getting up. I mean, the number is getting up. Please stay safe. I hope to see you guys soon, probably in another webinar with Kananga, or hopefully in the physical event next time. All right, so with that, thank you very much for your time, and may the timing be with you. Back to you, Sean.
Yes, thank you so much, Derrick. Yeah, like God willing, hopefully we can have more physical sessions after
Yes.
This COVID-19 can be contained, and we can move on with our life. All right. So yeah, let me tell you more about next webinar. So this is the session that will be conducted in a Mandarin by Kananga Investment Bank's research team's analysts. So Rocky Road to Recovery. This is happening on the 22nd of October 2020. Is a Thursday, 8:30 to 9:45. I put the registration link. I send you the registration link. By all means, join this session so that the analysts will share with you the outlook for the next few quarters. Okay. So for those people who do not have account yet and you're looking to open a stock trading account, I also put in the link in the chat group. You can go there to register. Just go to your browser and type www.kentrade.com.my/open-account-form. That's how you can open an account with Kananga Investment Bank. And for those of you who already have a stock trading account and you would like to open one more, so you just also fill in the form. Drop your contact details in the form, and Kananga will arrange a friendly dealer representative to attend to you. All right. So thank you so much, Derrick, for sharing with us how can we profit from chart patterns in the Malaysian stocks. I guess today attendees who are showing up today have learned a great deal from you about a few chart patterns that you have shown us just now. With that, thank you everybody. Stay safe, especially for people in the red zone and for people in the CMCO states like Selangor, KL, me included, and also in Sabah and Putrajaya. So stay safe and adhere to all the SOPs so we can we can overcome this pandemic together. Okay, and go through it stronger. With that,
Yes.
thank you everybody and have a pleasant rest of your day. Bye bye.
Okay, take care. Bye bye.
Signing off. Thank you, Derrick.
Thank you. Take care. Bye.
Bye.